Good morning, everyone, and welcome to the Quantum Leap Morning Pre-Market Leap. My name is Doug McKay. I'm the founder and head moderator of Quantum Leap. Quantum Leap is a private group of traders that have been around in one form or another for about 6 years now. Each morning we come together and take a look at the structure of the market, go through our morning routine. I start with a very basic macro to micro look, looking at where we are within the different time frames of trends, then take a look at the overall market structure. And then we drill down to putting our trade levels and our targets and our hypothesis in for the day. Today is Tuesday, June the 30th, 2015. A couple announcements before we get going. One very important one. I had called a meeting tonight to talk about moving forward with the subscription room. Unfortunately, a friend of mine's father died while I was in Toronto, and the week is tonight. Unfortunately, I'm going to have to go to that, and we'll have to put off the meeting until I was planning on doing it tomorrow, but tomorrow is Canada Day. So that won't work for me, so I'm putting it off until Thursday, and we'll schedule it for Thursday and look for that announcement. I'll post it on both Twitter, StockTwits, and into the Quantum Leap trade room, the chat room. Before I get going, I do have to go through the disclaimer. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves a risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own trade plan and your own risk parameters. Okay, so let's start with the news. Obviously, we've got some scheduled news today. We had Canadian GDP came out as expected. 9 a.m. Eastern, we have the S&P composite 20 HPI year over year, expected to come in at 5.3. Then 9:45, we've got Chicago PMI, and then the big one will be the CV consumer confidence. Of course, their headline news is the big news and the reason for this big move down with the Greek situation. Of course, they put the referendum off until July 5th, and all the banks are closed. So, but there'll probably be all kinds of rumors, news, and headlines. So lots of headline risk out there. Keep your risk very tight today. So, first of all, I want to talk about the head and shoulders that we were looking at last week. I put the neckline in around 62. There's left shoulder, head, right shoulder, and the measured, the main target, which is the 61.8 extension, is at 2018, and the extended target's down at 1991 area. The big thing, though, is this gap that we've got, and I think we're going to come back and try to fill this gap and probably make the move down. But it's that 62 level. We know what that 62 level is. It's the microcomposite value area low from the microcomposite that runs back to beginning of February to now. And we'll take a look at that in just a few minutes. One thing I did want to just bring to your attention, something I talk about at the end of each month, is whether or not we're in critical mass. And yesterday we hit critical mass. Critical mass is a theory in terms of the bears and the bulls. You basically take a look at how many days are left in the month, then take a look at the 20-day ATR. Right now our 20-day ATR is running about 21 points. So, you take the week open, which in September, I'm sorry, not the week open, the month open, which in September was 2100, and then deduct the number of days ATRs, and yesterday that critical mass came in right about 2060. So when we broke that level, what happens is there's very little chance that the market is going to move back to claim the open, and the bulls will sometimes step to the sideline and capitulate, and you'll get a continuation move down in the direction of the bears. And this works on both sides of the open. If we were up above more than the number of days times the ATR, we could hit critical mass, and the bears would give up, and the bulls would take over. So right now, I'm still looking for a continuation move down if we get back below that 2060 area. 2059 is the one that I'm actually looking at. But let's go back to our normal routine. Each morning I like to start with just a basic chart, candlestick chart with a 9 EMA and a 20 SMA. All my moving averages, that's what you'll see on my chart. I'm looking for slope and separation and where we would violate the trend. And we knew that the trend on the monthly wouldn't be violated until we got into that 2050, 2045 area. We came right down to the 9 EMA and bounced off it yesterday. We do have a little bit of loss of slope and separation, but not much. The trend is still very much intact. And this move down, on the news, this is just a normal rotation. This does not mean that the top is in and the sky is falling and we're going to get this bigger move down. We still have unequalized highs up there in the 2100s, and we will at some point in time go back. We're just not going to do it right away. So going to the weekly is showing this weakness coming in. You can see a clear picture of this head and shoulders on the weekly. We have come down and broken below the 9 and the 20 and violated the trend on the weekly. We've got a naked cross starting here at 2091. Write that down in your journal. That's a number you want to keep an eye on, especially because the microcomposite VPOC that I was talking about that goes all the way back to the beginning of February, the VPOC shifted up from 2087.50 up to 2093 area, and I'll show that to you in a minute. Going down to the daily, you can see that we had that big gap down on Sunday night. They pushed down. We had a low down at 2047 and a quarter. 42 area is still a very big target for us, and then of course the measured move down to that 2019 area, and 2011 is still anticipated. But we've created a technical gap here with possible FUBAR, Mr. Sneaky. We'll see if this comes in. I'm expecting an inside rotational day today, and then a possible move to come up and close this gap up near the FOMC number, which is 2084 and a quarter, and possibly come up to the naked cross. We've got naked crosses on the 30-minute and down. So let's go down to the intraday and just take a look at if we got any trends coming into the RTH session. You can see that we've got a very strong trend on the 4-hour, good slope separation, created a FUBAR Mr. Sneaky technical gap on this, came up, closed the technical gap, and we're struggling to get back above the 9. But we do have a strong trend down on the 4-hour. A gap close against the 20 will bring us up into that 2079, 2080 area. Excuse me. Going down to the 30-minute, this is where we start seeing these naked crosses. We have a naked cross right here at 2073. We have a start of a trend to the upside. We had a technical gap. Mr. Sneaky closed that out, rejected the 9, and now we're moving back up in the direction to close some of this gap and get the Mr. Sneaky. A half gap fill from yesterday's open will take us up to 2085.50. Going down to the 30-minute, or 15-minute, I should say, same thing. You've got slope and separation to the upside. Again, technical gap with the Mr. Sneaky, and close the gap and continuation up. And then going down to the 5-minute, you can see we've got a little bit less slope and separation. We closed that technical, that naked cross. Can't talk this morning, right here. And we did leave one below us now at 62, and this is going to be an important one because it's right at that microcomposite value area low. So let's take a look at that structure and look at possible levels for the day. Just to bring people that are not been in the room for and are visiting, this microcomposite that I'm watching right here goes back to the beginning of February, and our value area high on it is 2108.50. Everybody knows we've been trading off of that level for all of last week, and it's been a very good level for us. And we said if we got below the 2108.50 that we'd come back into this distribution zone, which we did on these 2 days, come back down. Now you can see where the microcomposite VPOC for all this period of time, where the most traded price going back to the beginning of February was 2087.50. When we came down on these 2 days, we had a shift of that microcomposite VPOC down to 2093.75. So we do have a shift in value right now inside of this value area. But more important to us right now is this level right here at 2060.75. This is the value area low. I'm actually going as low as 59 right here. The CLVN, and I'm going to be watching this very closely. Below 59, you got to look at 51.70 or 5, the microcomposite VPOC from the last time that we were down here, and more importantly, this one down here at 2042.25. 2045 and a quarter is a strong CHVN, but I'd be watching this 42 and a quarter, and then you got 37. 37.75, 30 and a quarter, but the big one is down here at 2011.25. Now this 2011.25 was the 2019 in the June contract, and that is our measured move on that head and shoulder to the 61.8 extension. So I'm looking between the 19. The 19 is now the CLVN, and I'll be watching that 19 and that 11 and a quarter if we get back below this 2059. So let's take a look at overnight and start putting our numbers in. Our overnight high is, excuse me, our overnight high is 2069. Our overnight low is all the way down at 2049.50, just above that naked VPOC from yesterday and just below the naked close at 2049.75. And then our overnight VPOC is up at 64. Gotta get rid of this, sorry, I don't know why this is still on my chart. Overnight VPOC 64. And then you can see that overnight we had a double distribution, and the key CLVN is that CLVN, or the LVN overnight is the CLVN at 59. So 59 is going to be a major trade area for me today. All right, we don't really have much else. The HVN on the lower distribution is 55, so that's going to be our first target below 59. And then we don't need this. And then let's bring this up. Currently trading 66. We're going to open up inside of value, inside of range. So looking for a rotational day, I'm expecting to open up and take out this overnight high at 69. Now, problem with where we're going to open if we hang out in this area is there's not a lot to lean on in this area. You've got the CHVN at 66. We're basically trading right around this longer term price acceptance. The first one is 68 and a quarter CLVN. So I'm going to be using that, but it's going to be a weak, in my mind, it's going to be a weak trade area. But if we break it, you know, we'll take out this overnight high. The problem is the overnight high is right there, 3 ticks above it. So, just be careful on the open. You could probably use the 64, but I think you're better off to use 6250. I'm sorry, 6075, the value area low of the micro composite. So I'm going to use that. And there's really not much in here. You can lean against the midpoint, and that would be the level that I would use if you want to get a trade in on the open. Personally, I'd wait for them to come up here, test the 69, and then see whether or not they accept the break above the 68 and a quarter, and see if they're going to move up. And that move up will be to test the value area high. As they take out the overnight high, look for them to continue up to this 7150. And I'd be looking to see if we see any responsive sellers up there. If we don't find responsive sellers up there and they break above that 71, my main target above right now is that 2073 to 2074 area, those two naked crosses, the one on the 15-minute at 2074 and the one on the 30-minute at 2073 and a quarter. So I'm going to use 2074 because it's just in front of the open from yesterday, which was 2075. And then above that, the secondary target is going to be up here, right here at 77. And we've got this upper distribution, very sloppy auction here. This is a trend day. You can see how toothy it is, and no real price agreement or price acceptance in it. And then above that, we've got the 70-79 area, or 2079-75 area. And then I'd be looking for a move up to take out the range high up here at 83 and a quarter, but I'm really looking at the FOMC number, which should be 2084 and a quarter. And then the half gap of the gap down on Sunday night is 2085.50. And then if we do get up here in this area, the big number above us right now is the 2087.50. Oh, come on, I can type this morning. And that's our main target above range and above value. And then again, you've got this 2093, which is the extended target for today up here. It's a naked VPOC. It's the microcomposite VPOC, and you've got a naked close just above it at 2095. I'm not expecting a big move today. They made the move. I'm expecting rotation inside day. So my main target above, if we do break out, is going to be that 2087, 2085 area. All right, below us, key level 2060 and a quarter. A move down to test the 59 CLVN. Below the 59 area, your first target below us is we've got let me bring this in. We've got the 2055, and then the big target below us, or our main target below, is going to be this naked close here, just in front of the overnight low and the naked VPOC. We've got the 2049.75 gap close. Get me the rate. front. And then below that, you've got the naked VPOC, and then you've got the value area low down here at 47. Look for responsive buyers to step in there, and then below that, this whole 47.50 to 47 and a quarter. And then if we break down to the low side, the main target, the first target below range is going to be this 45 and a quarter. But I'm really looking at that 42. And the naked microcomposite VPOC at 42 and a quarter. And then look for possible support to come in the 37 area, 37.75. And then below that, you've got 30 and a quarter. I don't think we're going to get down here today, but you never know. We have to prepare what we're going to do and where we're going to trade down here and where our targets are. And then below 30 and a quarter, you've got 26.75. I'm sorry, this is a target. And then, of course, my extended target is, I've got it right now at 2011 and a quarter because that's the naked, microcomposite VPOC. I'm going to shift it up here to the 2019 area because of the measured move on the head and shoulder and CLVN with secondary target at 2011. I think if we get down here, we are going to see this 2011. You got a naked close here at 2015 and a quarter. So that's what I'm looking at. As I said, I'm expecting a rotational day today. We're going to open up inside value, inside range. We'll go through your auction checklist open and watch these levels. Be careful in between the 68 and a quarter and 50 area. It's going to be a tough area to trade, and I think we're going to see some larger rotations as they oscillate in this area. So just know where you're wrong quickly. Don't be stubborn. Don't try to hold in a trade that goes against you. Let's take a quick look at the Renko with Keltner. You can see that the 20, let me bring it up so you can see the 2063.50 is the Keltner center line. Our overnight VPOC is at 64. We're trading right around it. A move up, if we hold the Keltner center line, a move up will take out the overnight high at that 2069 area. Keltner channel high is 69 and a quarter. A break below the center line, a move down. Our 24-hour VWAP is down here at this 2060, and the move down to 2050, 2057 will come down to test the lower Keltner. Quickly take a look at our analytics. You can see that we've got mixed bag on the midterm and long-term sentiment. Midterm is long, long-term is mixed. We're really not stretched out in any way, shape, or form in equilibrium on any time frame, only down to one standard deviation below equilibrium. Equilibrium right now is at 2064.75. We don't get stretched out until we get down to the 62 area. So nothing we can really see from there. I just want to take a look at gold. Not the chart I wanted. I don't have my gold chart up. Where is it? Here it is. We haven't really, no, that's not it. Where did my gold chart go? Oh, there it is. Just want to bring this in. Our current balance right now is up here at 1177. The smaller microcomposite VPOC, let me just bring this in, is still at 73. Nothing really changes right now in terms of what we're seeing in gold. The big number to watch down here is this 1161.70 CLVN. That gets us below range. You could probably take the breakout trade below this range to come down and test the 61.70. Above us right now, we've got 1179.40. A move above that, look for your first target at 83 area, with continuation up into that 88, 89. You can see the longer term microcomposite has shifted down. It was up at that 89. It's now down here at the 77. The big number I'm watching, as you all know, is this 1192.50. Above 1192.50, I'm looking for them to break above and come up into the composite VPOC. This is the most traded price up here at 1220. This is going back all the way to October of 2008. So that's a strong magnet as we come up. I'm waiting for this trade. When it happens, I'll be taking it. I don't even think about not taking it. It's going to be a very easy trade and a good, 8 points easy on gold. So that's what I'm looking at, coming into the market. Again, looking for rotational with a bit of an upside bias to take out the overnight high. But if we break below that 59 area, then my bias changes and we'll be looking to come down and take out that naked close and come down into this area where we've got a cluster of targets down there. As always, remember, just a reminder, there is no meeting tonight. I have got to go to a wake and we'll reschedule that for Thursday. Tomorrow is Canada Day, so I will be probably trading in the morning, but I'll be gone early in the morning and then taking the rest of the day and spending it with my family. As always, trade well, trade safe, and we'll catch you on the flip side.